All right, what's up, everybody? Welcome back for episode 9 of Market Close News. Glad to have you folks in here. Got a few things to go over and talk about. This is probably going to be one of our shorter ones, but hey, we'll try to stretch it out to an even hour for you guys and maybe answer some questions at the end as people trickle in here. But thank you guys for joining in. My name's Sal. We got Cody over here. We talk all things crypto, stocks, business, real estate, investing, building your finances up, all that stuff. And we got quite a bit to talk about. So if you guys can hit that like and subscribe button, and also if you'd be so courteous as to share it, that's how we support this live. So thank you guys, and we'll get on to some of the basics here. Kind of closing out the day, we have the market cap down about 2.8% for crypto, down to 2.24 trillion. We also have the Greed and Fear Index holding at 58. Got Bitcoin, Ethereum, pretty much everybody kind of pulling back a little bit from the highs of yesterday. Just a little nice pullback. Did some dollar cost averaging myself across all my crypto holdings, as well as I made a huge purchase of Nvidia today. So there's that too that we're going to cover, and a couple other cool things in news going on. I want to quickly talk about Chainlink here because they're having a nice little pullback. I expect to see kind of like 10%, another 5% down. Should get close to like high 14s, like 1490, and just some pullback. I see some people selling some profits, cutting out. Right now it's also the summer. People are cashing out some money out of their crypto holdings to kind of cover like vacations, bills, or what have you. It just part of that thing, part of the summer lull, and one of the deepest lulls before we get into really the full part of the bull run here. But once again, even though I'm still eyeing Chainlink, but let me talk about Quant because Quant's looking like we might see 70s right now, and I might buy some more Quant because it's at a very good price. If I see it go down to in the 70s, I'm buying a big bag of it. But like I said before on yesterday's stream and on every other stream, they're back. If you guys want to check it out, they're on YouTube. Is that I'm keep holding this because the big banks, a lot of big players are in this, a lot of big money still involved with Quant. Though, like many others, I'm not a fan of CBDCs and how centralized the network is, but I do see that there will be some value added in there as we go. Is not there's not much going on news wise. The Overledger is live, so you can use that. You do need to use Quant to use the Overledger. And if you guys are just stacking Quant in your wallet, make sure that you have Ethereum also in there. But before we get into more crypto stuff and really just some, because like the scams are out, the meme coins are being printed like crazy. Before we go into that, kind of want to go over this here. You know, Elon Musk, the Tesla shareholders vote for Elon Musk's pay, which is a $48 billion compensation package. So it's definitely up. It's definitely something that's probably going to, I would say it's going to stay negative. It's going to sway negatively right now, given the average retailer's mindset right now on just wealthy people in general. They're saying it's a scam and a system, but this was basically the package that he was supposed to get for the last like 6 years of the company doing what it was doing. So, and to be honest, I think he's just taking this payout to further some other ventures he may have, Twitter, SpaceX, or even something completely brand new. But it is probably one of the largest package plans for a CEO, and I think it puts him well over 15% a 15% shareholder in Tesla. I'm not sure if it will because it's all basically stock and stock options is basically what it is. It's not really it's not cash. He's not getting 48 billion in cash. I think he's getting very little cash. The rest is just stock options and stock in Tesla. And with it pummeling, I don't know how that's going to do, but that basically adds to his net worth, putting him probably far beyond the reach of anybody now being able to catch him. So I just want to kind of touch base on that. That did go through. I believe it went through yesterday. They're just People are just reporting on it today. It's nothing really serious to like really take a look at, because I don't think Tesla's going to have as much of a presence going into the next 5 years, because Tesla itself, it's not really doing too well in my opinion. I think their quality has dropped. They're not delivering on the self-driving cars. They're not really delivering on anything, and I think the value has capped on it. So I I cashed out well before the pandemic and everything, because I had to start my moving company. But I would not get back into this right now. I probably wouldn't get back into Tesla or any EV company for a long period, because there just isn't a large enough demand of EV vehicles right now, and there's no support, there's no network, there's no nothing on them, and people still have anxiety on EVs. So I could expect just more of a downward turn in sales. They are not going to hit sales expectations or anything. And I think the hype of Tesla is pretty much over with the retail investor. But let me bring up Roaring Kitty here. Let's hear. Okay, got it here. Okay. Okay, that's really just, we'll just leave that there. So, Roaring Kitty, I think he's going to face a huge amount of backlash from this. I think he legitimately pumped and dumped on the Reddit supporters. I think he saw an opportunity to make a lot of money, and he did it. I mean, even still today, I'm seeing people comment on my old GameStop posts, GameStop to the moon, but it's like it can't go to the moon because it's not a valuable company. It's a dying company. You're basically trying to turn like a blockbuster type business into $100 a share. And it's just funny because this is the same thing that happens in crypto, and I think because no one in crypto was getting caught with those pump and dump schemes, or really like getting hit hard with penalties. I think he thought it was okay to do this with GameStop, and he did make a tremendous amount of money. He made a significant amount of money off of this. I don't think anyone's trying to short the stock now, but I know the company's not going to be around in the next 5 years. I just have a feeling GameStop is going to get hit hard. They're definitely closing stores. I think they're closing 200 stores over the next 2 years is what their plan is. So, like, let's just pull up GameStop real quick. Let's pull it up here. Shares tab instead. So it's like if I go last 5 years, like it's been on a steady decline. Like ever since the meme point, it's just been down, 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 because there is no value on this. And it's only been going up recently, mainly because Roaring Kitty kind of promoted it. I don't know if Cody is, because he might still be trying to get home right now. Cody, do you have any thoughts on this GameStop stock, on the GME thing? I don't know if you can hear me. Let's see here, because The company. Let's just take a look at the earnings. Where did the earnings go? The, I don't know if it hit or missed its earnings. I don't think so. Let me see here, guys. I'm trying to check the earnings. Let's see here. Where are they? Yep, they missed earnings in Q4, so that was the busiest season. They missed earnings by they're by 3 cents a share. They expected a loss of 9 cents per share, but they hit a loss of 12 cents per share. Um, yeah, they've been in the negative territory for the last year and a half. So this company, GameStop, has been losing money for the last year and a half. Last year and a half, GameStop has been losing money. So I don't see where it's going to go to the moon if it's losing money. The only saving grace for GameStop that's in the coming years is that when people get hard hit on money, they tend to go for the used store environments, the used games and entertainment to kind of pass the time, to kind of get their mind off the hardships. So there's a possibility that can make it, but however, there's a lot of local shops, local businesses that do this much better than GameStop, and they have a much better community. And they're able to be way more flexible, such as they can attend flea market sales on the weekend. They can do like special events. They can pack up and go to a convention. Like GameStop really can't do that. Like they can't take the stock out of the store, go to the flea market for a weekend, and then try to put all the inventory. It's just mass chaos. But small business, yeah, they can. They can certainly do that. So I don't know if they're going to be able to make it through this next run. Just I don't think they're going to be able to make it at all through the next 5. I'd say they'll have probably a decent 2 years, but they're still going to be a negative loss. I didn't even take a look at the financials, but the earnings per share just keep going down, 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 down. So they're losing more and more and more money every quarter. It's only a matter of time before that negative 12 cents per share becomes negative, I don't know, probably negative 50 cents. If they have another bad fourth quarter, which they were pretty bad this past holiday season, if they have another bad holiday season, then it's definitely this company's wrapping up and closing doors in the next 5 years, especially if for an entertainment company. And I think Roaring Kitty is going to face a little bit of might face a little bit of jail time for that. Might happen. I mean, he might get investigated because I think a lot of people are going to lose money. A lot of average people are going to lose money, and unfortunately, a lot of people put their hard-earned savings into this, and you're trying to moonshot your savings in a time when the economy is just going downhill. So it's just not looking good. It's just not looking good. But let's go ahead and take a look at Nvidia. Now, ever since the split on Monday, we had the 5 days. As you see here, the stock split had we did a 10-for-1 split. So if you were holding it, if you're holding 10 shares of Nvidia, now you're holding 100 of it. So it's kind of a kudos moment, but this is a good moment if you missed the boat because now it basically reset the value on it by 10xing the amount of available shares out there. I would suggest dollar cost averaging now because what's going to happen is in about 3 to 5 years, the company's going to do a stock buyback program and then probably another stock buyback program. And then in 10 years, that 10-for-1 split, that strike that happened this recently is going to bring the stock value back up to over 1,000. I see it doing very well by 2035. So this is something, especially if you're like in your 30s or 40s, this is a good company to hold for the next 10, 15, or 20 years, because a lot of what they're doing is very integral into the next stage of technology and products, AI, quantum computing, all of that. So definitely look for this to be headed. We're going to be heading in the right direction with this. And it's something I myself, it's now 5% of my stock portfolio at the moment, but it probably will get higher. I might buy another huge chunk tomorrow morning, and then I might buy another towards the end of the month, depending on how it goes. But I think dollar cost averaging between now and 200 is a good deal. Even if it goes down and goes down to 80, I'd still I'll dollar cost. I would go even harder on dollar cost averaging and buying more and putting more money into my holding in it, because I know in 10, 15 years it's going to be worth a lot more than it is right now. I think it's a good play for right now. As like I said before, it was overvalued for what it was, and I think getting in at that point would just been too high. But now that they did this, it was either going to have a correction or a stock split. Now we still could have a correction on the price, and that could give us a nice 30 to 40% correction. But I just don't see it because they're kind of in the space of technology and in the tech industry that isn't slowing down at all, even with this bottoming out of the recession. So it's definitely something I would say keep your eye on out on it. Don't look away from it. Don't look don't throw this under the radar. It's definitely something to go in to definitely keep in your portfolio or definitely on your watch list. I would advise dollar cost averaging in when you can on a scheduled basis. I also want to kind of talk about Coinbase stock. I know it's down a little bit, but overall for the year, it is up. As you guys know, I have been holding this for the last year, and I have. Let's see here. It is what is Coinbase? Coinbase is 7% of my portfolio. I'm not adding any more to it, but I've definitely made a significant chunk of change off of it, off of what I have. So I think along with crypto.com and a couple smaller ones, it's either these guys or crypto.com that are going to do the merger of exchanges. So just like how in the beginning of stocks you had all these exchanges and then the NYSE kind of became the one, I think that's what's going to happen with crypto. It's either going to be Coinbase or crypto.com that's kind of going to become the one, and the other exchanges are going to become really brokerages, because that's really what they are. So we'll have to see how that goes for next year. But I'm placing a nice bet on this, that I will be making quite a bit on this. However, I do see that, like many other stocks, in the next few years, this will probably do a nice stock split, a nice heavy stock split. So it may be like a 3-for-1 or 5-for-1. I think they're going to do a stock split in the near future. Not any guarantee on it, but we'll have to see. They may wait until like Nvidia just it gets up to like 1,000 to do it. So, but it is definitely a viable company along with crypto.com, that people have a large amount of trust in it, and they got a good team and a good management behind it, which is leading and heading it hopefully in the right direction. But I also wanted to quickly talk about, there was since we're on Google, let me just search it up here. Let's see here. Interest rates. Nope, that's not what I'm looking for. Okay, federal rate cuts. Let's see here, because there was definitely something that happened. So as you see here, this is one of the stories. I'm not sure if this is. I don't want it to play a video. So Okay, so there, it's on YouTube, but this is by CNBC. So you guys we got to hit fair use on it. But the Fed isn't going to be raising rates, I or lowering them. They're kind of keeping them stagnant right now. I think lowering the interest rates would be a very bad idea because then we'd just be pushing like kicking the can down the road. Real estate and auto loans and student loan industries sectors of the debt industry are suffering majorly right now. Student loans aren't getting paid back. I think 80% of student loans are still deferred and have received zero payment on anything. And mortgages, about 5.5 million American households are behind on their mortgage right now in the 90-day territory. About 10 million are in the the 30-day territory. So it's looking very closely like 2008, like right like 2007 going into 2008 because the big part of the crash happened in the mortgage crisis happened in March of 2008, followed by the night the kind of the guillotine in October. So I think what they should do is just raise interest rates. You're gonna there's going to be about $587 billion of commercial debt that's going to just be wiped out. We're probably looking at about $1.4 trillion in valuation in stocks and everything just wiped out. Probably another trillion in valuation in crypto just wiped out. But if they don't do it, if they don't raise the rates and they just keep things, and all we're doing is just kind of the pots we're like boiling, the pot's boiling and the water's overflowing, but they're not turning down the heat. They're just kind of leaving it alone. What we need to do is actually turn up the heat, boil off some of the water, and get back down to a safe level. That's what we need to do. I think rates should be at least a percent, like 1 to 2% higher. So I think they should raise it by 8 more points. Are they going to do it? No, they're not. They're not going to do it. What they're going to do though is they're going to leave it stagnant, probably up until September. They're going to do one rate cut in September, which is going to spark a frenzy towards the end of the year, coincidentally, right around the election time. And of course, homes will start flowing again, inventory will start selling, things like that. What a lot of people don't know is that California, Texas, Alabama, Mississippi, Georgia, North and South Carolina, New York, mainly New York City, but New York and Florida are all, and I think Washington and Portland are in there too, all basically the coastline states are getting hit the hardest on inventory. So they have increases of inventory by 300%. They're having the highest foreclosure rates. They're having the highest eviction rates. They're having corporate. There was a one place in Texas where the people just left the business left the corporate loan. So this huge property complex, is changing hands. Is going back to the bank. So it's not looking good. I expect we're probably going to see 50 small to mid-sized regional banks collapse because of this, and they're going to get gobbled up by the bigger banks. So it's not going to be as bad as people say. But then again, we don't know what the integrity levels of the big banks are either. Because I know Capital One right now is suffering greatly on credit cards. I think 70% of their credit cards are in are potentially in default status. The last time I looked, are potentially in default status, and that's not looking good for them all. Their mortgage side has just been slumped. Period. Auto loans, they're taking a hit on auto loans, so we might actually see. I'm not guaranteeing anything, but we might actually see Capital One be one of the big banks that fails. And it's going to fail probably in October if it fails, because we're at the crunch point for the auto industry, the loans, the lot loans, and everything. There's a couple YouTubers out there that talk about just the car and the car industries, and I can even see that like the big lots, like the Ford, the Chevys dealerships, the Jeep and Dodge dealerships. I myself, I'm buying pretty much. I'm buying a 2022 Dodge Ram for my business, and it's only got 15 miles on it. It's been sitting on the lot for 2 years, and I got an amazing deal off of it because I know that they're trying to get that sucker off the lot and stop paying interest on it. And right now, I just see suffrage, suffering, suffering. I maybe see one new car tag a day. And even before the pandemic, during this time of year, I would see maybe like 10 per day. During the pandemic, I was seeing like almost everybody had a new car. Now nobody is getting new cars. If there's anything, I'm gonna take a bet. I wonder if Midas is a publicly traded company. Yep, they are a stock. So Midas is a stock because like they're not doing very well, but they're not doing very well. But Midas is probably gonna be the way to go because Midas the mechanic shops. Because I think all mechanics are gonna make a shit ton of money in the next 5 years because nobody's going to be able to afford a new car. Nobody's going to be able to get a used car. Nobody's going to be able to get a hoopty. So that's where I think we're headed. I think so many of Gen Z and millennials and even my generation Gen X are going to get gutted out during this reset because their credit's going to be so crushed they're not going to be able to buy a car at all. They're not going to be able to buy anything at all. So I am very curious to see what's going to happen in there. But I know we're probably going to see a lot of big dealerships go out. We're going to see a lot of changes in the auto industry. And we're definitely going to see a bailout on Fannie Mae and Freddie Mac because the student loans they hold, it's just too much. Like they're not getting paid on them. So once again, taxpayer money is going to go in there and you guys are going to be upset and it's gonna cause more inflation. So you got better be prepared for it. For me, it's fine because if you're already in the position where you have properties and you have everything, then if inflation is what you want, if you already have the assets, because like there are homes I bought for like $100,000 like 3 years ago in Arkansas, and now they're going for like 340. Some are going for almost 400,000. If you have your house now and you survive this, your house will be worth probably another 30% higher and you'll have a nice chunk of equity. My suggestion is minimize your budget, get out of get out of any debt that you have, small debt, mediocre debt. You've got credit cards, F them, don't pay them off. Like, I mean, if you're in survival mode, if you're feeling overwhelmed right now, let me see if I can switch this for you guys. Oops, let me see here. I don't want to do that. If you guys are feeling overwhelmed right now, at the like you feel like you're overwhelmed on debt, it's too much right now. You got your car, you got car loans, you got your credit cards, you got your student loans, you got your mortgage, and it feels like, man, I'm just barely making it or holding on, or it's like I got to cut somewhere. Here's my advice. This is what I did when I was in a massive amounts of debt. I made sure knocked out, I knocked out the primary stuff. So like I'd say, okay, I have to pay my rent. So I paid my rent. I have to pay my car, paid my car. That's it. And I have to pay for food and utilities. No, not cable, but just my phone and just keeping the lights on and the water on, right? After that, my credit cards, just let them go. Just let my credit cards go. Just let them go. Just let those things go. They're unsecured debt. Screw them. We're going to pay them back towards the end, right? Just and then focus on paying off the debts that matter, and make sure that you're saving money along the way. Because there's no point in trying to pay for all the money to debt, and then you have an emergency, and now you're back to square one. So what I say to do is just pay the essentials, save the rest, save as much money as you can, and then when it stacks up enough, go negotiate the debt and knock it down. And don't negotiate like, oh well, if it's 10,000, I'm only going to pay off 8,000. No, no, no. Do what I do. If you owe 10,000, say pay. I'm going to pay off two. They'll negotiate. If they say, hey, can you come up by 2,100, so on until you hit like 2,500, pay off a chunk, and then save for 6 months. Repeat the process. Get a second job if you have to get as much cash as you can in, because it's going to be rough. Even I took that method with my moving company, and I think by 2022 I had paid off all my debts. So 2023 and this year it was just all cash. I have all of its profit, and I'm able to diversify it and invest it and grow my business. And if you're in that point with your business where you think it's hard to come, that you're not going to make it, just remember, pay for the essentials and see where else you can cut. Because believe it or not, you can cut a lot by before you can even cut labor. And when I say cut labor, in your business, it's not just start laying off people, but see how to count yourself and save a payroll for it. So you might have to be working 6 days a week, depending on the business. If you own like a coffee shop, you might have to work 7 days. You might have to open up on Sundays. You have to find ways to make more money and spend the less of it going through. But if we're looking for interest rates to go down, I'm sorry to say, guys, the heyday is over. If anything, they're probably after the election, they're going to jack those rates up. They might drop it a little bit in September, but once March of 2025 hits, rates get hiked. June, rates will get hiked again. They'll just keep hiking until they break the economy at that point. That's what I think they're going to do. Not positive on it, but that's what I think they're going to do. And unfortunately, the higher the rates go, the more zombie companies are going to crash out. So the bottoming out of the recession might last a little longer. That's going to be unfortunate for many of us, but you have to be prepared for this. That's part of investing, is preparing for the hard times and stacking your cash for when you're ready. So that way you can survive, you don't have to worry, and you can still continue to invest. Um, but with that, guys, there's really not much more to talk about. This is probably the last thing I wanted to talk about today. There's not a lot going on after this. Just remember, rates are going to be stagnant. They might drop in September to kind of spur like a nice euphoria before the election. We will definitely see a drop. We'll definitely see a correction in the stock market. We're at all-time highs in the stock market. It's going to come down eventually. Although the AI and the quantum tech industries are going to keep steamrolling forward, I still believe they're good bets. Like always, it's going to be a dip, guys, but it's not going to be as sharp of a dip as people think. People think like it's going all the way to zero. We got a long way to go to zero, but it will correct and we will go down like 15-20%, and then the economy will take another 5 to 10 years to trace back up again. And of course, it will exceed what the highs of last uh, of the last bull economy. But with that said, guys, I'm going to check out here because I'm done for the day. I have to go home, take care of my dogs, close up the shop here. But with that said, guys, make sure you're doing your research. Don't moonshot anything. And be careful of the crypto scams, the pump and dump scams, because they are coming back hard. Especially when a lot of those influencers that like promoting them, they are running out of cash. Because as the economy goes down, their target audience starts shriveling up because they have less and less and less money to use. and to give them through donations or courses or whatever. So they're going to be desperate and start pushing those products really, really hard. So just beware, just be careful, do a lot of research. Don't invest in anything you don't understand. Only invest in things you understand how the business operates, how the business makes money, how the business stays profitable. And don't moonshot your life savings. Your life savings and your emergency savings are for those only. Only invest money you are willing to lose. With that said, guys, I'll catch you guys later.